So if you want any of this information outside of tonight, just shoot me a text or again, click the link in my link on Instagram and you can get in touch with me there. My number's there, my email's there, and I have a bunch of resources such as forms that you can just fill out to streamline the process. So, how to prepare to buy. These are the four simplest things you can consider when you're preparing to buy. And for those of you all that did put C or D, you're in the perfect spot because you have a lot of time and you can even get your score to the highest possible since you have that time. So again, everybody is obligated to one free credit report a year. So you can order a credit report just because you want to make sure everything is accurate each year from each bureau. And it's important that you order it from each bureau because each bureau has different information. So a lot of people think that all three of their credit reports are the same, but they're all different. Each number, each score may be different. And that lets you know that there are inaccuracies on your report because they should all be the same. All of your information should be the same on each of your credit reports. So if you have a 600 with Equifax and a 580 with Experian, that means Experian has some information that may be outdated or some information Equifax doesn't have. So make sure you order all three of your reports and dispute any errors such as old last names, old addresses, old phone numbers, the basic information. Deleting those errors will increase your credit score. The next thing you can do, and the most important thing you can do to get a loan to make the process easier, decrease your debt. Decrease your debt. You want to try to get your debt obviously as low as possible, but at least less than 30%. For example, if you make $4,000 a month and you have debt that exceeds how much income you're bringing in, that means you have too much debt to your income. So lenders look at a ratio, and that ratio is compared through all of your bills compared to the income you bring in every month. So for my entrepreneurs, it's very important that you file your taxes right those years leading up to buying a house because you don't want to make it look like you're not earning enough to pay for a house. So if you know you want to buy a house in a year or two from now, make sure you are having someone professional file your taxes that knows how to file best for entrepreneurs. Most of the people I work with are entrepreneurs. I have a lot of teachers that have W-2s. That's always a simpler process, but nowadays I'm getting more clients that are entrepreneurs and they use their bank statements. Well, if you're going to use your bank statements, then you have to file your taxes correctly, especially if you want to buy a house in your business name. Again, if you want to buy a house in your business name, you also need to make sure all of your documents for your LLC or whatever kind of business you have are in order if you plan to buy a house in your business name, which is possible. So, if you want to go conventional, that's for my people with the higher credit scores. You need to have about 36 to 45% of debt compared to the income you make. FHA, which is one of the most popular loans because most people that buy homes have went to college, and with college comes student loans for majority of us. So they give us a more they're more lenient for FHA borrowers because we have created a responsible debt going to school. Any military people or people that are open to living in rural areas that are not in the city that qualify for USDA loans, VA and USDA loans do not have a down payment. So if you know somebody that's in the military, or if you know somebody that was in the military and is now considered a veteran, they can buy a house and they won't have a down payment. So that's something that, you can tell someone if they're looking to buy and they're now out of the military or in the military. For those people, their debt needs to be less than 41%. And then jumbo loans are for people who want larger houses, houses that are a lot around $600,000 plus. So when you want a loan of that amount, you need to have as less debt as possible. And then you have your non-QM loans that are up to 50% of debt you can have. So they're much more lenient. One way you can figure out how to calculate your debt is to simply do a Google search and you can put in debt to income calculator. I have one hyperlink here, but I'm not going to open it because it'll open to, the internet. And I just want to stay on the presentation. So that's also something that you maybe can write down to remind yourself to do to calculate your debt to income. And it's a good idea to do it each month just to make sure you're not spending more than you should be compared to what you earn. Okay. So saving suggestions, down payments. Most people that buy a house, they pay a down payment. A lot of people that don't pay a down payment, it's because they're using down payment assistance. Typically, down payment assistance, you have to have a credit score of around 640. So if you don't have that credit score and you end up paying a down payment, your down payment will be around 3%. And it just depends on the type of loan that you use when you buy your house. So whatever kind of house you want, you would just take 3% of the purchase price and you should start setting that aside for a down payment. Again, a lot of my clients recently, they haven't been paying down payments because of the amount of money that the government is funding people with to buy homes. So consider that sometimes you may not even have a down payment. Like I said, VA, USDA, they don't have a down payment. So it is ways around a down payment. Saving for closing costs. Right now in this market, sellers are very, very generous. They're paying for closing costs because they want to get their houses off of the market. So sometimes, again, people don't pay closing costs, but if they do, it's a minimal amount. So that amount may come in taxes or something else on their sale that they have to be responsible for. When you're saving, it's important to use the 50-30-20 rule. If you haven't heard of that, it just means every time you get a pay stub, every time you get a commission, you need to put 50% away in an account for bills, 30% in a checkings account, and 20% in a savings account each time you get paid. A lot of times, people aren't able to buy a house because they lack the discipline to save. So if you really want to do something and you know you may struggle with saving, you should start earlier rather than later. Okay. So upfront costs for buying a house. Earnest money is typically 1% of the purchase price. So if you want a house that's $300,000, you're going to pay $3,000 in earnest money. Most people pay earnest money. There's always some type of earnest money unless in the contract, you put you're not going to pay it and the seller agrees. But to take the house off of the market, you typically will pay 1% earnest money, and it does go towards the purchase price. So then you'll just pay the balance, not the balance. You'll get the loan to pay the balance for your house. The next thing you'll get up front is an inspection. Inspections are optional, but they're highly recommended. So an inspection is when they go in the home and they look for anything that may be major or minor needing repair. And that is also what realtors typically use for negotiation. They use the inspection as a way to ask for things. The next thing you'll need is an appraisal. Again, I work with lenders. Sometimes you don't pay an appraisal fee, or you can roll it over into the loan. You don't pay it up front. Appraisals for VA are non-existent. VA people don't pay an appraisal. So this is why I'm stressing each person is different. Like real estate is so specific to each buyer that this is just general information. And that's why it's so important to have a conversation about your scenario with whoever you plan to work with. Okay. So, down payments, that's what we discussed. Sometimes it's $0, sometimes it's $1,500. So right now I have a client that paid $1,500 earnest money, which they consider as their down payment because they have down payment assistance for their house they're buying. So they didn't have to pay the 3%, even though they're going the 3.5%, even though they're going FHA. So you can move into a house with around $1,500 or of earnest money, that 1%. Each person is different because every house price is different. So I really think that the best thing you can do for yourself, if you want to know, well, how much would it cost me if I have this credit score and I make this and I do this because I don't have a W-2, all of these different things that may apply to you. The smartest thing you can do is talk to a lender because they're working for the company who loans you the money and they have certain policies. Okay. And a lot of lenders are very lenient when you have savings. So if they see you have accounts with money in them, they're more prone to loaning you money or being lenient with how much money you have to pay up front. The lower your credit score, the higher your interest rate will be. So that's why it's important to work on your credit score if you know you need to. Closing costs are different for everybody. Some people pay no closing costs. Some people pay around 4% of the purchase price for closing costs. It all depends. Another upfront cost is commission. That is if the seller decides not to pay commission. So you can always, that's always, okay, thank you. That's always a way to figure out if you are going to be able to buy a house. You have to figure out if the seller is helping you with commission or not. Okay. So I'm going to go to, we talked about income documentation, 620 credit score plus. If you have a 620 credit score, we need to talk. If you want to buy, we need to talk. Income verification and a savings. So all of these things we really went over. This is a general home buying timeline. We can go over that more specifically with those who are ready to start this process. For those that are just preparing, it's something we can talk about and have a conversation about when you're closer to ready to buy a home. So these are some smart ways to buy a house, and these ways can get you in a house quicker. Buying with a friend, buying a cheaper home and fixing it up while you live there, getting a co-signer with good credit, or purchasing a property with no rental restrictions with extra space that you rent out to someone else and charge them, which helps you pay your monthly mortgage or your rent. So the next thing we're going to do is play Kahoot. So this is just to see if you guys were paying attention. So I'm going to go ahead and host it live. As you can see, we have around 8 minutes. So when the game pin pops up, you would just join from your device and you will enter the game pin in. Again, this is just to see if you were listening. Okay, so I'm going to go ahead and put up the website. You can go to www.kahoot.it. If you happen to have the app, you can just enter the game pin. But if not, just go to your phone or your computer or your tablet and enter this website. Thank you, Kara. Did that choose that picture for you, or did you choose that picture? It looks like something you would choose.
I did not. It picked it for me.
Oh. Hey, Ebony. Thank you guys so much for participating tonight, spending this time with me.
No, thank you, sis. This is information I needed.
Yes, I love giving information. Okay, so I think it'll take us about 4 minutes to get through it. So I'm going to give people about 2 more minutes to join the Kahoot before I press start. Okay, so I'm going to go ahead and start. And you would just choose the shape or the color for the correct answer that you think. So the question is, what is the first step to home buying? Saving for a down payment, finding a realtor, buying furniture, or checking your finances and credit. Okay, well, you guys got that right. You were listening. Checking your finances and credit is always the most important thing you can do to make the process the easiest. Okay. And if you don't have the resources that you need, if you know you need to improve your credit, ask for credit information. If you know you need to know what documents you want to have leading up to you buying, make sure you figure that information out beforehand, not when you have to hurry and buy a house and then you're rushing and frantic. Okay, number two, which factor affects your mortgage interest rate? The stock market, your job, your bank statements, or your credit score? That is correct. So, your credit score is the most important thing that will determine your interest rate. Right now, interest rates are around 6%. They're probably going to hover around the five and sixes for a while. No one anticipates that they'll just drop drastically, but there are builders offering buy down rates, meaning you can get your interest rate at a 4.5 and then later it rises, or later you can refinance if rates drop, but we won't know. Next question is true or false? You need a 20% down payment. 20%. 20%. That is absolutely false. You do not need 20% to buy a home. Most people pay 3%. Some people don't have a down payment. Veterans and USD homeowners don't have a down payment. So, the next question is, which document is necessary for home buying when working with a realtor? What is something you have to do in order to work with a realtor? Do you need a offer? Do you need an agreement between you and the realtor? Do you need credit reports to work with a realtor? Or do you need an executed sales contract? You need a buyer brokerage agreement. Yes. So you have to have an agreement to say, I am working with this person and they are helping me with this financial transaction because of legalities and the amount of money that is going on in a transaction, such as the amount for a home. Number five, what is the greatest benefit of buying versus renting? Flexibility to remodel, more neighbors, building equity, or no landlord? Building equity. Correct. That is correct. That is correct. Building equity. Moving on to number six, true or false. A home inspection is optional, but highly recommended. That is true. That is true. I always convince my clients to get an inspection because if something is wrong with the home after you close and you decide not to get one, that would not be on anyone but you. Okay, true or false? All home loans require a down payment. False. 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 So again, if you are VA, you do not pay a down payment. If you find a USDA home, you do not pay a down payment. Number eight, how does a realtor help you with home buying? Giving clients access to view homes, facilitating the transaction process to closing, negotiating on the client's behalf, or all. That's right. Realtors pretty much guide the entire transaction. So it's important because it's a lot of things in there that you have to have studied to know things. Just like everybody has their different lanes, realtors know certain things. So, true or false, a bigger home is always better. That is false. So, no, a bigger home is not always better. You should start where you are and work up to where you want to be. Last question. Why is a good credit score important? Lower interest rates. The higher the credit, the bigger the home. Credit is not important. Or higher pre approval amounts. That's right. The better your credit, the lower your interest rates. Good job, you guys. Thank you for participating. So, we didn't have a third place winner. And in second place was Kara. And in first place was Ebony. You guys, thank you so much for coming. It is going to end soon, and please tell others that want to buy. My goal is to increase Black and Brown home ownership. It's very important.